All right. Today's Wednesday, November 12th, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. We have an important few sessions to come here before the close of the week, and I say that because with the lack of government data, we just had the government reopening, we'll talk about that in a minute, but with the lack of the data, the focus shifted away from the Fed policy, from the macroeconomics, and of course we know that we have a band-aid right now with the situation with China. So when you look at the wall of worry, the main item and the focus was on AI, and we began to question the AI narrative, and we talked about that in details in last night's program. The circular financing, the fact that these companies are peaking in terms of revenues and growth in sales and the bottom lines and profits. At the same time, they continue to increase capex in an insane way. And for some companies, interest expense is going up and rates are not going down. So we have a little bit of nervousness here about the AI trade. But I think as soon as tomorrow's session, the focus of the market is going to shift back to the Federal Reserve's policy. And that could be an upsetting factor for the stock market. So let's begin here one step at a time, because we just had the breaking news that the House passed the funding bill and now the government shutdown is over. Is that good for the market? I think that has already been milked on Monday's session with the gap higher. You might see a positive response in the airliners. You might see a positive response in the healthcare insurers. You might see a positive reaction in hotels, for example, because now government employees will be able to travel again. But besides that, I think that the government reopening is now a nothing burger. It's over. And we're not going to react too much to it. But the outcome of the end of the shutdown is what's important, because now we're talking about when will the data be released. And here I can look at the previous shutdowns and how long it took after a reopening to get retail sales and construction data and the CPI and the PPI and the jobs numbers. That is all up for grabs this time around, because we just had the White House today saying that the jobs and inflation data may never be released. We're talking about the October data. They will never be released. So we're not going to have any guidance right now. And is that because we have no data collection because of the government shutdown? Could that be a factor, or could be another factor that they're trying to hide something bad that happened in the economy in the month of October? Yesterday, we got the news from the ADP saying that the economy lost 11,250 jobs a week in the month of October. And before that, of course, we covered the data from Challenger, Gray, and Christmas with the largest layoff announcements in the month of October in 22 years. So I'm going to go on a limb here and put my tinfoil hat on and say that they probably don't want to release the data because they know it's horrific. They know it is a confirmation of stagflation. You got a weaker jobs number meeting a higher inflation number. And here comes the shift in focus. We're going to leave AI on the side right now. We have NVIDIA's earnings coming out next week. We can worry about AI next week. But right now, the worry is going to shift toward the Fed policy. And you heard Jay Powell in the latest FOMC suggesting that don't bank on the December cuts. That's not a certainty. And just today, we got Boston Fed President Collins saying that we should keep rates steady, and she sees high bar for further cuts, meaning we need to see really weak jobs numbers before we begin to cut again. And I think this kind of view is going to be dominant because you have Schmidt from Kansas City. He already was a defector in the last vote and said, no, I don't agree with the rate cuts because inflation is supposed to be going down to our target of 2%. It's actually going up. And today you had the resignation of Bostic from Atlanta. And you have to wonder why he's resigning right now instead of running again or asking for another renewal of his term. Well, it's probably because Bostic been talking hawkish lately. And there's a lot of politics, of course, because Bostic was dovish when Biden was president. Now all of a sudden he's hawkish, but he knows that Trump is coming with the hammer. And he wants to clean up the Fed and fill it with his cronies. Obedient Fed members and governors were going to say, yes, sir, we're just going to keep cutting rates. We don't really care what the data looks like. We don't care about anything. We're just going to keep cutting rates until inflation, of course, spikes higher, and then the whole thing goes kaput. That's a topic for another conversation. But for now, you have a lot of Fed members, governors, presidents about to speak in tomorrow's session. I think that we're going to look at it again in the conclusion of this video, but I think we have Kashkari, I think we have Williams, I think we have many more. And if they begin to say, look, the White House says that we're not going to have October data, and the November data is coming out while the FOMC is ongoing. CPI will be in the second day of FOMC, so we don't have enough time to make a decision. So we're probably going to pause. We're not going to take the risk of cutting again when you got CPI inflation going above our target by full percentage points. That's insanity. How do you think the market is going to react to that? Now that we already know what the problems are with the AI mania, we talked about them. Some names went down, NVIDIA went down, CoreWeave went down. So we have a little bit of a cleanse in the AI mania. Now we're await what's going to happen with NVIDIA. NVIDIA goes bust, then we got a problem next week. If NVIDIA delivers, then we have restoration of hope in the AI trade. But in the meantime, this is how the focus is going to shift from AI back to the Federal Reserve. And I think that's the topic that the market wanted to avoid. But now it has to face it. And with the absence of data, I think the Fed is not going to cut. So either release really, really bad data, or if you don't release, then the Fed is not going to be guided to do anything. And I think they're going to pause. Now, here's another wild card that could also be in the wall of worry and blow things up. It's not really related to economics, but today we got the news on the Epstein files with the revelations of the emails between him and his co-conspirator, if we may. And he suggested that he knows how dirty Donald is, talking about President Trump, of course. Epstein also added in the emails that Trump knew about the girls. And he said that Donald Trump is the only dog who didn't bark yet. Now, why is this important to the economy and the market? It's important because if we reveal really damaging facts about the president's involvement in the Epstein fiasco, what if it is big enough of a bomb to take him down? What if he gets impeached? And this time it's going to pass, because if there are damaging information that comes out, damaging evidence, then you have both parties going to pretty much dump him really fast. We want no association with him at all. Would the market be upset if Trump goes down? Absolutely. Because right now, and I was just talking to some clients of mine, former clients, happen to be seniors, high net worth, and a lot of them are gambling their money on cryptos and altcoins. What they say is, oh, but you don't have to worry about a crash because Trump loves the stock market. He will never let it down. And Trump kids love Bitcoin, so I'm not going to sell Bitcoin because he's going to keep, with his magic wand, of course. I say that sarcastically. He's going to keep Bitcoin higher. Of course, the president has no power in keeping the market higher. If it wants to go down, it will go down whether he likes it or not. But there is this psychology among investors that so long as Trump is president, nothing bad will happen to the stock market because he's going to stop it. He's going to manipulate. He's going to do dirty tactics to keep the market from crashing. And if the Epstein news is so damaging as to take him down, oh, you bet the market is going to be upset because we're going to have a change, major change, in the psychology of investors. So keep that in mind. And looking at the odds market, expectations were for the release of the Epstein files next year. Now they're expecting it's going to happen immediately, before the end of the year. So that could add a wild card in the wall of worry that could come from nowhere and cause huge market volatility. Just keep it in the back of your head. It's more of the political news story. It's not really a financial news story, but it could become one if anything really damaging comes out of it and takes the president down. But with that setup in mind, folks, now you know that the market is going to shift focus from AI back to the Fed policy. And depending on the commentary we're about to get in tomorrow's session with all of these zombies talking, the market could get upset. So let's add more color to this conversation by revisiting the market activities today, beginning with the closing of the indices. And here we go. The diamonds up in the green, again, leading the pack, up about 0.68%. So you know that value, rotation of value, it's the bullish dominant theme for now. Still no love for AI or technology. We have a lot of concerns right now. So the NASDAQ is negative by about 0.25 percentage point. I think it might go down sharply tomorrow. Then you have the S&P pretty much flattish. The Russell 2000 going negative about 0.25 percentage point. That is yet another leading indicator that we probably have one ugly session before we get maybe a rebound Friday, and then wait and see till NVIDIA's earnings come out, and that's going to be next week. Looking at the sectors, we see that at the top of the pack, thank you to the rebound in the price of gold today, we see the miners, gold miners lifting materials up to finish at number one. But healthcare remains the organic winner of today's session. It's the most attractive. It's really Tina trade. You can't go anywhere. If you want to rotate out of AI and park all the way to the year end, you got healthcare as the best alternative right now. Maybe financials, not a fan, never been a fan, but a lot of managers are. So they continue to rotate toward financials. At the bottom of the pack, we have comm services, Meta, Google going down. That's going to be enough for the sector to go down. Energy going down because of the commodity. We'll talk about that in a minute. And cyclicals down, real estate down. So all in all, it is a defensive rotation to gold, healthcare, and the banks. What about the breadth today? It is pretty much neutral, so the market maker continues to win. Whether you have calls, you got puts, if you buy them overnight and even the market moves your way, you better cash out first thing in the morning. Otherwise, the market maker is going to do their thing, move it up and down, and neutralize both the calls and the puts. So we see the NYSE 52% advancing, 46% declining volume, and the NASDAQ slightly negative, 47% advancing, 51% declining. Neutral Monday, neutral Tuesday, neutral Wednesday. We got one day that I think is going to be ugly breadth. That could be in tomorrow's session, and then a rebound with a positive breadth to end the week. Moving on to the heat map, beginning with the hunt for value once again. So you see that the majority of the sell-off is happening in the AI data center story, and specifically in the big caps. So Meta, Google, Amazon, Tesla, Apple in the negative today. Lots of concerns about Oracle, but Microsoft, Nvidia holding, and I think we have a little bit more weakness before the week ends. And then things are going to stabilize a little bit, awaiting Nvidia's earnings next week. You can see the hunt for value, folks. Names like Cisco, even within the AI data center story, and you see Cisco after hours blasting higher. That is still in good valuation. IBM is the same story, so you see these two names doing okay. AMD, we know that we have a pump by Lisa Su. Not sure if that's going to hold, to be honest with you. I think that 260 is a really stiff resistance, and it might hold, especially if Nvidia comes out weak. It might actually scare AMD's investors, even though maybe AMD is indeed taking some market share away from Nvidia. Oracle remains a weak spot, and it will continue to be one, but we do have a rebound coming really soon. It's going to be a small rebound, but once it's done, we're probably going to see more weakness in Oracle until we have management or the CEO addressing what's going to happen with the promises by OpenAI. They're taking a lot of loans right now, and if OpenAI pulls out, they're going to be screwed big time. So this is a major problem for Oracle, and you see CoreWeave down, and Palantir down again. I think a lot of this, if we look at another theme that we have today, you have Bitcoin down. Bitcoin remains the weakest spot in the market right now. And a lot of the holders of Bitcoin are the holders of Tesla, Palantir, and Meta. So when you see Bitcoin going down, some of these names are also affected negatively. MicroStrategy, of course, is a disaster. And we're probably going to see, if Bitcoin loses 100,000, you're probably going to see a rapid collapse in MicroStrategy shares. But the market is looking for value, so they're finding value in some of the financial assets right here. The big banks, Goldman Sachs, Stanley. When you look at the entanglements that we talked about last night, and you see that the big banks and even Goldman Sachs, Morgan Stanley have little to do with that. A lot of investors, value investors, a lot of portfolio managers who are looking to de-risk before year end. They look at these assets right here as a safe place to rotate. We continue to see the demand for healthcare. Again, the best deal in town, I think it's healthcare, because it gives you good valuations, good revenues, stability, dividend. So we see here demand for big pharma still doing okay. You got AbbVie up about 3.5%. The weight loss continue to go up. Eli Lilly, NVO, but I would not chase them, and be honest with you, not my favorite. You have Abbott Laboratories, another value name. The health insurers names beginning to move higher. Donner, Thermo Fisher, all of these are good names. So again, if you must add anything in the portfolio before year end, you got healthcare. And I don't see really another alternative besides gold. And today we see gold working out pretty good. You see the gold miners up in the green, but is it because the dollar went down? Well, we see the Chinese names down. We see some of the industrials that should benefit from a dollar going down actually trading lower. So this was not about the dollar going down. This was about a defensive rotation toward gold. And as the price of gold goes higher, we see the miners benefiting. Of course, energy is getting hit today because of the sharp pullback in the price of crude. I'm going to talk about it in a minute here in the commodities analysis, but with crude oil down, as we've seen it today, you see pullbacks. All of the stuff that looked pretty good yesterday is pulling back big. So we go back to the same story. You need energy exposure, but you have to keep it at the big guys: Exxon, Chevron, and Shell. You can have one refiner, Phillips, VLO, whichever one you like. And you can have one nat gas play, that is going to be EQT. But that's about it. We cannot branch over here or over here or even in the names right here, until we have crude oil trading above 65. When we look at the other sectors, if we can extract another theme, of course, you have the health insurance names going up, along with the airlines. So we have a lot of optimism right now, legitimate optimism, that the government is going to reopen. So you see Delta, United, Southwest, American Airlines all going higher. The hunt for value, though, did not benefit staples today, with the exception of Hershey's, because we've seen the price of cocoa going down. So Hershey's up about 3%. Then you have the cyclicals, a little bit of rebounds in travel, some of the stores, the apparel. But again, be honest with you, if you're going to adventure here, you got to stick with the reliable ones. That's going to be Mickey D's, the Auto Parts, O'Reilly, AutoZone. I would go with O'Reilly, especially if it dips more. And you have TJ Maxx, but you really don't have a lot of options in this corner right here. It's all dependent on the consumer, and the consumer is not doing pretty good. Now, one thing you got to keep in mind, throughout the week, we've seen pullbacks in Meta, Google, Amazon, the heavy technology names. So the market maker has to do some neutralization before the weekends. Maybe we'll have a climactic move tomorrow. We'll have these names going down big and the indices going down in a climactic move. That means that Friday you have to bet on a rebound in these names, because we need neutralization to happen in the options market before NVIDIA's earnings next week. We move on to futures right off the gate. What stands out? How about crude oil? Crude oil was down big, and we have a problem here because OPEC Plus came out with a negative outlook for next year, resupply and demand. But we also have contradicting information from other agencies saying that no, we're probably going to see demand for oil being hot all the way till 2050. So what caused the sharp drop that we see here in the WTI down about 4.25%? You have the Brent oil, crude oil Brent down over 3.75%, impacting also the gasoline RBOB down about 3%. And diesel down about 3.75%. Nat gas holding a little better, but we've heard the same piece of news from OPEC Plus for months now, that they're going to increase the supply, that the supply versus demand is balanced, and I think there is a lot of politics behind that. The truth is, if we have a slowdown in China, the truth is if we have a flare-up in the trade war, or we have recession beginning to creep up as we continue to see that in the consumer here in the U.S., you're probably going to see demand for oil going down. And hence, recession is the biggest enemy for crude oil. But what caused the move in today's session? Well, that goes hand in hand with what we've seen with gold. You got gold up about 2%. You got silver up about 5% today alone. Platinum 2%. Palladium 2%. Even copper was positive today. It tells you that we have the expectations the dollar is going to go down. Commodities traders are saying that the dollar is going to go down, so let's go ahead and buy some metals and dump crude oil. Are they going to be proven right or wrong? Who the hell knows? I think it's a bet on the government reopening, and now we have the government reopening, so we'll see how the dollar is going to react in tomorrow's session, but my 2 cents would say not so fast. We have to get the Fed out of the way. And if we have hawkish Fed talk in tomorrow's session because of the lack of the data guiding them to do a December rate cut, you're probably going to see the dollar going up. You're probably going to see gold pulling back, metals pulling back, and maybe you see a little bit of a rebound in crude oil. Of course, the OPEC Plus news added more to the misery today in the flush down in crude oil. That is a factor, but I don't think it is the main factor. I think commodities traders were trading based on expectations that the dollar is going to head down. Now, as far as softs, we see a sharp drop in coffee. Yesterday, we talked about, hey, don't expect that the price of coffee would go down anytime soon, but it did go down right away, about 6%. Why? Because we have Scott Bessent in the morning who came out and said that now we're going to exempt coffee prices from the tariffs. So you have tariffs, but excluding everything. Why are they doing this right now? Because the prices at the grocery store are absolutely insane. And when you look at the food CPI, that's moving up. You look at the poll numbers, they're absolutely horrendous for the White House. So they figured out that coffee is one of the main contributor to food going higher in the CPI. And that is happening because of tariffs. So they decided to exclude coffee out of the tariffs, and we see a sharp drop for now. But my 2 cents, the reason why we have coffee going up, it ain't really the tariffs alone. It is also a legitimate shortage of supply. When we talk about supply and demand, you have high demand for coffee, so long as the economies continue to hum. But the supply is facing a lot of weather challenges. You have few countries that really produce coffee beans, and when they lose a bit of crop, when some farms go bust, as we've seen in Brazil, for example, then we have a problem. And that's not going to be solved by just eliminating the tariff alone, because demand will go higher, but supply is nowhere to be found. So again, reiterate, you're probably not going to be seeing here a sustained drop in coffee. It will probably stick at a higher price. It's going to continue to contribute to the CPI, at least the food section of the CPI, to continue to be sticky. We see a pullback in OJ, about 3.5%, pullback in cocoa, about 3%. That's pretty good for Hershey's. A little bit of a rebound in sugar, 2.25%. That's not good for companies like Coke, for example. And then grains all over the place, no major movements, with the exception of soybean meal up about a little over 1.5%. You have soybean oil down about 1%. Moving on to the big casino options, what do we see here? Right off the gate, the volume is still low, so no confirmation, folks. No confirmation for the rebound that began earlier this week. Otherwise, you would have seen a lot of call options with big volumes. That's not happening. Matter of fact, we continue to see underneath it all, the demand for puts is ticking a touch higher. It's at the high 30s now. Sometimes we see it in the 40s, and you're beginning to see that desire to say that we're not out of the woods. I'd like to buy some protection now that we've rebounded a few percentage points in the S&P and the NASDAQ. Anything that stands out from the implied volatility, not really. You have AMD with high volume, but the IV percentile at 74%, so it could squeeze its way a little bit higher before it begins to pull back. The name that, of course, stands out to me, Cisco, 97% the IV rank, and the IV percentile rather, so that means that even if you bought calls and the name is up, you might not make as much money as you thought, because when you have the IV percentile at 97, the advantage is in the market maker's side, meaning the seller of option, not the buyer. And when we look at Oracle, here we are, 99% the IV percentile, 92% the IV rank. We're getting closer and closer for a rebound in Oracle. We might play it as soon as tomorrow's session, folks. If we look at the open interest for the SPY all the way to the end of the week, what do we see here? We see the highest number of open interest in the calls already at 680. We're trading right now above. The highest number of open interest in the puts is 670. So the market maker needs to move the tape all the way between 680 and 670 to achieve maximum pain. I think they're going to do that in tomorrow's session, move the tape all the way down to 680. And if we have volume in the puts, they might park it all the way to 675. And then we'll see what happens. If there's more put volume, we can go all the way to 670. And if we do, we're probably going to rebound Friday, because the market maker wants to close the tape by the end of the week between the highest open interest of the calls and the highest open interest of the puts. The unusual activities. What about we begin with the bullish ones? We got GLD, another big one here for gold. Somebody bought the 395 calls. They sold the 410 calls to finance the 395 for the expiration date of December 5. This is not too far out of the money, because GLD right now trading at about 386. And all in all, spending about $21 million. I would rather be in the GDX for now. GLD can be expensive. If the dollar moves up, you don't want to lose a lot. So I would use GDX, and I gave you some trades on Discord today. I got another bullish one for you here for ALB, a name that we like, lithium, we have in the Maverick portfolio. Trading right now at about 108, 110, but the traders see it much higher. They bought the 120 calls for the expiration date December 19, 2025. Spending about a little over $700,000. I see it more than 130. What about the bearish ones? We begin with TSM Taiwan. Right now trading at about 290. Somebody's hedging, buying the 287.5 puts for the expiration date of November 21st. Spending about $2.5 million. Then we have another one that I want to short. Not just via put options, but short. Short means you borrow the shorts, you borrow the shares, and you sell them short, and then you buy them later and pocket up the difference. I get a lot of questions about that. What do you mean, Mav, about short? But the name here is BE, Bloom Energy, trading right now at about $125 a pop. The trader went as far as 55 puts for the expiration date of Jan 16, 2026, spending about a little over $1.5 million. You bet I'm going to be shorting this name this week. And here's another one I'm going to add to my short portfolio. It's HIMS. The name right now trading at about 39. The trader bought the 35 puts for the expiration date Jan 16, 2026, spending about $1.5 million. Let's do the charts, beginning with the E-mini futures for the S&P 500, where we see here probably the ABC inverse ABC we've been talking about is about to play out. We have what it appears to be a topping candle here. A doji candle means, okay, we've reached a point of decision and we might decide to go down tomorrow. If we do, then we have the inverse ABC scenario. Furthermore, you look at the SPY and hourly chart. We've closed the gap. We're trading pretty much at the important levels right here. We have 683.14 and we have 682 for today's session at least. But we see a bear flag formation building out. Could it be that we begin to give up and head down? And if we do, we'll probably find support again at these numbers once more, but it's going to be really short-term support. We might just gap below them. You're going to find the next support right here. And the low of this candle was 678.73. If that fails, then we have the wick right around here. And that's going to be 675. After that, we go ahead and close the gap. Now, we don't have any good leading indicators either. Look at the HYG. Topping in a shoulder, perhaps. Bearish engulfing candle. Got it. We might go down and revisit the 50 days moving average. If we break the 50 days moving average, then we have a confirmation of it's over. It's done. The top is in. We're going to begin to see the formation of a bear market. And you look at the 2 hours chart for the VIX. Bull flag, ready to go higher. I think that's the case. We're probably going to begin to trade higher and challenge 18, if not 19, in tomorrow's session. And for the NASDAQ Crude, it's still the weakest of the bunch. Right now, maybe a topping in a shoulder. Some would argue that it could be, again, inverse ABC in tomorrow's session. We'll see what happens. But right now, the NASDAQ lagging, and that's not a good sign for the S&P. You can run higher as much as you can with healthcare and energy and gold or whatever, but if the big guys in technology begin to pull back in a serious way, forget about it. The S&P is not going to hold. You got another leading indicator in the IWM with a reversal candle right around this trend line right here, and we might lose the 50 days moving average in tomorrow's session in what could be, again, another inverse ABC pattern. The dollar index, I'm not going to give up here because I think if we do an inverse ABC in the indices, it's going to be because we have an ABC breakout in the dollar because there is a freak out event. It could be, ladies and gentlemen, it could be if we're just reading the tea leaves of what we have in the economic calendar tomorrow. It could be some Fed talk, some hawkish Fed talk. Now that the data is not going to be released, they're not going to cut in December. They're not going to cut until they see the data. And that could be a problem where we see a reaction in the market where the dollar goes up, bond yields go up, we see the dollar heading to we see the indices, the S&P and the NASDAQ heading down sharply. And that could be on the backs of some Fed comments. With that being said, a lot of folks are jumping the gun right here and saying that, look, I think the dollar is maybe going down, and even if it goes up, it's going to go up for the wrong reasons, defensive reasons, and in that case, gold works out. I'm not as optimistic, but the way I'm going to play it is via the gold miners. This is the safest way, cheapest way. You're not really committing for GLD or the spot price of the commodity or physical gold. You buy some call options, 80. You sell the 85, which is the top right here. For December's expiration, the risk versus reward is okay, suggesting that we might revisit on, let's say, an impulse here. Revisit the highs in gold miners, be it validated by the dollar or not. A leading indicator could be silver. Silver is already at the highs, so probably gold is now following the footsteps of silver. And you have palladium breaking out right now, maybe aiming for some of these reactions right here at 140, if not closing the gap. So I would not chase silver since silver led the move higher. You got gold miners as a catch-up trade. You have palladium as a catch-up trade. You have names like aluminum, Alcoa, which also looks as it's challenging the highs and it's about maybe to surpass the highs. Names like lithium, ALB, same story here, already surpassed the highs. So is ALB leading Alcoa and many other metals? I think so. Crude, on the other hand, yeah, that's not going to happen. At least right now, it looks like we don't have an inverse in his shoulder. That's not going to happen. And we're going to begin to look for a bottom. I think that today might have been a combination of the OPEC news and the dollar maybe going down, not up. That could be the case. So we'll see what happens. Not going to really jump the gun and make a conclusion here until we close the week for crude oil. I want to see how the weekly close is going to look like because for all you know, you get 2 days worth of a rebound. We're back at 60. Now we're back on track in crude oil. You got the 30-year bond yield below the 50, but look, I think that the Fed here, the Fed commentary is going to be more hawkish than we anticipate. We might see an inverse in his shoulder formation where we see the 30 beginning to move up until it stops by the data. And the data is not going to be released right now. We need weak data to keep these interest rates down. And if rates go up, you have the XHB home builders topping candle, sure. Ready to go down and retest the 200 days moving average? I think so. And if it does, it's probably going to break below the 200 days moving average. Any update on Apple? Nope. Same as we discussed yesterday, could be the double top, but for now, you can't really jump the gun. If you have a trade on it already, that's okay. But if you're going to initiate a new trade, you need to up the strikes from 265 to 270. So now you're going to go with the 275, 265 put spread, or 275, 265, 270, 260. You got to keep it within a strike higher than the 265, 260 that we discussed earlier. Nvidia, Bitcoin, what do we see here? Maybe another ugly session where we go down and close the gap, and then a rebound, close the gap above, and we have a neutral position before this report comes out. The souffle Tesla, inverse ABC, looks like it. We have the support of the 50. You break that, you get a C leg that could take you down all the way to 400. A trade that I like right now is the 420, 400. Put debit spread. You can go to December. You can go to early December, late November, whichever one you'd like, but don't go beyond that. And use spreads, not naked puts. BTC is the most important story. And right now, look at that failure at 107,400. The bear is right here, Mama Bear. We've lost 104,000 as support right now. And we're probably going to go ahead and retest 100,000. If we do, that's going to be met with failure. You already see the convergence here of these moving averages. The 50 is about to cross below the 200. What we know as a bearish confirmation. This was a bullish confirmation. This is going to be a bearish confirmation. And boy, if Bitcoin breaks, you will see Tesla down big. You'll see Palantir down big. You will see Robinhood even down. A lot of the names that are retail investors are invested in, but they're also invested in Bitcoin, will get damaged too. And if BTC goes down, you have MicroStrategy now breaking support at a really important level here, 231.51. And if that is the case, let's take a Fibonacci. And if we do that, the next target is going to be about 150. So we have plenty of downside to come. It could happen rapidly if Bitcoin breaks that 100,000 support. And last but not least, Palantir, another retail investor's name. We closed below the lows of this candle right here, which means that we're going to close the gap right below the 50 days moving average. And it goes hand in hand with probably a disaster in Bitcoin. In tomorrow's session, a flush. If that is the case, we see Palantir flushing down along with the market, and then we'll see what the market maker is going to do in terms of neutralization before the end of the week. And moving on to the conclusion of this video, what do we have in the economic calendar tomorrow? A lot of delayed data that's not going to come out. CPI was supposed to get inflation. That's not going to come out. And the White House today says forget about the October data. That's, of course, the jobs numbers. We're not going to release those. Forget about them. So we have the Fed flying blind, and it's a lot of chaos and a mess. And I think the market is going to freak out about it. Keep that in mind. The lack of data and all of this stumbling in the monetary policy. You have a lot of Fed zombies talking, from Daly to Williams, from New York to Kashkari, from Mazalim, from St. Louis, from Cleveland, Hammock, and the departing Atlanta Fed Chairman Bostic. After he made a lot of insider money, now he wants to get out. Maybe get a job at Goldman Sachs or PIMCO. But some of them might begin to talk and say, look, we can't really cut rates in December if we don't have data. And if that is the case, it could be an upsetting factor for the stock market. On the earnings calendar, we have Alibaba. Not sure if that's going to come out or not. That depends on the Hong Kong market, really. But we do have Disney. That's going to be the big one before the bell. And then we have after the bell, we got AMAT. That's going to be the big one. Williams-Sonoma is supposed to report, I don't know when, though. And then you have JD along with Alibaba. That's going to come, of course, before the bell, assuming that they're going to report when they're supposed to, because Baba, I think, usually reports a little bit later than they tell us. So this is why you don't see a specified time for it. But with that, folks, this is all I got for you for tonight. Thank you for joining me. Thank you for listening. Thank you for watching. I appreciate and I love all of you. I'll be talking to you again tomorrow. Good night.